on YouTube, I have a video that says Harmonic Scanner is bae. All right. And recently, that video is not even all that new, but for whatever reason, the energy, the momentum has picked up, praise God, where people are starting to see this video. And I've got people inbox me. I've got a guy from South Africa that's like, Tracey, please show me. I've got quite a few people that have texted me and asked me. The emails are starting to come in. I'm like, oh my goodness, where is this coming from? So I thought that the video that I referenced was still up, and it's not, okay? So like I said, what I'm gonna do is I'm gonna share with you myself how to find your entries on the Harmonic Scanner, okay? Now, for those of you that don't know what the Harmonic Scanner is, the Harmonic Scanner is one of the tools and resources that we have at iMarkets Live that allows you to identify entry points when the market is making a reversal, all right? So the Harmonic Scanner picks up pattern reversals, okay? And that's kind of like its claim for fame, all right? That's kind of what it does, all right? So as you can see here, right, in this particular pattern, there's a couple of things that I go through now, just so you guys can see. Like right up here, it says GBP JPY. It's a 15-minute chart. It's a sharp pattern. For the sake of it, don't worry so much about what the pattern is at this moment in time. Okay, there's a little bit more that we could go into, but for the sake of helping you find the entry point, I just want to show you the process that I literally go through in order to do that. And it works majority of the time. Like nothing is 100%, but it works so much more of the time than it doesn't work, that if all you did was this, you'd actually be okay. All right. So I'm going to see if I can find a pattern that's a little bit further along, because this one stopped right here at the close of the market. And really, we don't know what's happening after this, because this candle closed at 5 p.m. on a Friday Eastern. And I really can't tell what's happening because we have to give it a little bit more time. All right. So I'm not going to do this pattern because it's really tough to do it when I don't have more information. Okay. The key is to use more of the information that's available to you. Right. Okay. So what I'm going to do is I'm going to come over here. What's going on with my mouse? Hold on, y'all. Okay, I'm gonna come over here to, goodness, is there something on my mouse pad? Okay, I'm gonna come over here to some of these patterns over here. Hallelujah, what the world? my mouse does not want to participate, doesn't want to act right. Hold on, let me see if y'all know these Apple mouses and stuff like this and all this wireless stuff. Okay, there we go. Woo, maybe there's a little dust on it or something. All right, so I'm gonna come over here and I'm gonna look for an hourly chart, okay? Just to make an example or to kind of, demonstrate. And I'll do it a couple times. So let's start here, GBP CAD. Only reason why I'm not gonna do GBP NZD is because I really don't like NZD pairs. But let me just look at it and see. Okay, the market is closed, by the way, guys. I mean, we could do this one. Okay? So I hope you guys are paying attention. Okay, pay attention. All right. So the very first thing that I like to do is when I pull up the chart or the pair, I look at the pair and I already know that it's on the hourly chart. And the first thing that I want to do is I want to test to see if this particular pair has divergence. Okay, and divergence means that in the candle patterns from the X to the D point, you see that line, this line right here, this blue line, that this line in this case is going down, right? It's going at a downward slant. Divergence would mean that if I come down to my RSI line, right? It's at a period of 14. If I come down to my RSI line and I go to the same points at the X, right? So here's the X up here. I'm going to come slide down to see where that is on the RSI, right? And just for the sake of you being able to see, I'm going to put a vertical line there. This one's blue. I'm going to make it red. I'm going to make it kind of thicker so you can see it better, okay? But if I come here and I line my mouse up with the X point, right? Here's the X point. I can plop a line right there. Okay. Now, in fact, let me make it a little bit thinner. Okay. So I can plop up. So I know that this line is directly, you know, correlated with this. I mean, even to make it better, I can just put it right there. Right. So now you can see straight all the way up that that line is right there at that point. Right. On the D line, here's the D point right here. Right. You can see the D, and this point right here, this candle, this blue candle is on the D line. So I'm going to come here. I'm going to put that candle there. I'm going to put that line there. Then I'm going to come down here to my RSI line, or my RSI indicator. I'm going to put it there, right? So we can see that at this same point, this line was up here, right? You see this squiggly line? That's the RSI line, all right? It hit this peak right here at the same time that it hit that D point, right? Okay, so now what I want to do is I want to draw a line from this X point to this D point actually on the RSI line, all right? So if I were to do that, I'm going to take a trend line. I'm going to make this one red as well, okay? And then I'm going to go from down here where this point is, right? And I'm going to come over here to where this point is, right? So I drew a line, oops. I drew a line from the X to the D, and there's already a line in the candles from X to D. Now in the candles, the line is going downward, right? But in my RSI, you see that the line is angling upwards. That's what divergence is. It means that in the candles, they might be going one direction. The RSI is going a different direction. It could be that the X to D is going up. That's fine. But as long as the RSI line is going down, that's still divergence, okay? And divergence basically means that there is, it's an indication that the market is actually going to reverse, right? It's actually going to reverse. Well, being that the harmonic scanner picks up pattern reversals, then we test for divergence to see if the candles and the RSI are really indicating a reversal as well. That's like confirmation that there's a high probability that the trend is about to reverse, okay? So as you can see, looking at this, you can see that the candles, right, just pretend like this little yellow diagram wasn't there, but you can see that the candles started here, right? And they were going down, right? They came up, but they're still in a downward trend, right? And what the scanner is saying, okay, it's gonna get to a point and it's gonna reverse. So it's not gonna be in a downward trend anymore. It's gonna go upwards, right? And we want to catch it on the move as it's going upwards and, you know, snag the money out of it. So we test for divergence. This is the way I do it, okay? I test for divergence first. If I don't see divergence, I don't really do anything else, right? I want indication that there's a reversal before I do anything. And so if I don't see that this line is going down, this one's going up, or that this one's going up and that this one's going down, then I'm not really spending much more time. I'm moving on to the next pattern. Right, real simple. So in this case, this one does have divergence, okay? Great. So now the next thing that I'm going to do is this is where the entry point really comes in, okay? Now, see that the scanner says that the entry point is 1.91965, okay? Which means that it's expecting price to come down to here and then go ahead and go up and reach our take profit 1, take profit 2, and or take profit 3. And it has a stop loss down here, 1.91199, okay? So you can see that right now, well, the market is closed, but when the market was open, or when it closed up, you see this blue candle that's going up, right? It hasn't come down to this entry point yet. So you don't know, just looking at it, whether you should get in this trade or whether you should not get in this trade, right? If you put a pending order in right here, you still don't know really what it's going to do, right? Because it could come down, but it could come down and keep hitting your stop loss, right? That wouldn't be good. And then if you have an entry order right here at the entry point, it could potentially not even come down to the entry point and it could still take off and go back up. And then you would miss the whole trade, right? So the whole goal is really to find out, how do I know when I should get in? When's the ideal point in time to get in, okay? So here's what you do. This is the secret sauce to perfect entries on the harmonic scanner, all right? So what you're gonna do, you're gonna come here and you're gonna get a trend line, okay? And this line is gonna be red to its spine, just so it makes sense. So I'm gonna come up to the C point, where I'm coming to the C point, and you can see this candle. that the C point is there. You can see that this candle, I'm going to kind of make it bigger a little bit so you can see this red candle. It's a bearish candle, but it wicked up. It has a wick that comes up to the top here. So I'm going to start there, right? And I'm going to bring my trend line and I'm going to try to touch, hold on. I'm going to try to touch the point at the top of the trend as best I can, right? I'm going to try to get as many points as I can to touch, right? So as you can see, if I start, this is the way you do it. If I start up here, right, and I just bring it down, the first ones that I touch, that's usually it, right? So that first one that it touches is that blue candle, right? You can see it right here, right? As I'm doing this, it hits that, it touches that blue candle first, right? So that blue candle, and then what it does is it touches this blue candle, right? The red candle almost touches, this one almost touches, this one almost touches, right? But ideally, this is where we're going, right? So it's touching these two and that's it, okay? So what you wanna do now is, since this is now your trend, right? This is showing you the pattern of that the candles are staying underneath this line. They're staying underneath this line, right? If anything, it could keep doing like this, right? It could keep going down, hit your entry, hit your stop loss potentially. So what we're gonna do is we're gonna wait, all right? We're gonna wait, and we're gonna wait until the candle, we have a candle at some point that's going to come above this line and close. Okay, it comes above this line and close. Now, when it comes above this line and closes, then we're gonna get in. That's when we're gonna, so this candle, whatever candle it may be, right, it will come above here. If it does, if it doesn't come above there, we're not getting in. It's real simple. If it doesn't go above the line, then we're not getting in. Now, go above the line doesn't mean just go up there and still be moving around. It means go up there and close, and then another candle starts to form. We're gonna get in at that point, okay? When this candle that comes above this line closes, boom, we get in. Now, why? Because it's an indication that now the market, the price is breaking the trend, right? If it's in the trend, it's not going above the line. You can see that? It's not going above the line. It's staying under the line. But if it closes above the line, then that means it's now broken the trend, right? It broke the trend. It broke the pattern. It broke structure. In other words, this is a downtrend structure. And if it now comes up and closes above, it broke structure, which means that now we have a much more realistic, high probability opportunity to win on this trade and actually get our pips going up to take profit one or whatever it is that you want to do, right? Now, here's what I recommend at this point, okay? Pay attention, please. I recommend that when you get in, let's say that a candle comes up here, it closes above this line, and then you do market execution and you get in. When you do market execution, you're going to do it on a buy, right? Obviously, because we're going up in price. You can see our entries here, our take profit is above. So we're going up, we're going to buy, right? When the candle closes above this line and it actually, and we get in with market execution on a buy, then we're going to get in at 10 cents. 0.01. I don't care what your account balance is. This is your entry. And the reason you're getting in at that very, very, very small price point is because it can still come back down and do stuff and do whatever it's going to do, right? Just because it closed above doesn't mean it's not going to come back down. But what we're saying is that this is the point. This is the high probability point that we know that it should potentially continue to go in the direction that we want. So while it's still coming back over here and retesting this point and doing the things that the market does, we don't want to have a lot of our money at risk. So if you only have 10 cents at risk, you get in and then it turns around and goes back red, goes negative and does whatever, then you're not really tripping off of that. Because if it goes down 10 pips, if it goes down 10 pips and you only have 10 cents, well, that's $1. Right? I mean, are you willing to, let $1 go negative until it turns around and goes where you want it to go? If you're playing this game, the answer is yes. The answer is yes. If you're not playing this game, I don't know what game you're playing if you can't do that $1. That's a whole different story. But $1, yes, right? And so then what happens is, then as the market starts to turn around, so let's say it comes up, it closes above the line, but then it goes down below. Let me just do a little example. Let's say, let me do a horizontal line for a second. So this is blue here. Let's make it green for the sake of this. So let's say you come in and the candle, there's a imaginary candle, and it comes in and it closes right there. Let me make it a little bit thicker so you can see it. It closes right in here, right? Okay, so then you get in right here, and you get in at 10 cents. And then it turns around and it comes back down to right around in here. And let's just say you're negative, right? You're negative. Okay, great. Then it turns around and it starts making its way back past your entry point, and it starts to turn blue. When it starts to turn blue, then you market execute with your real lot size, your real lot size. So let's say you're doing a $5 or you're doing a standard, right? Okay, so then you'll come in and then you'll hit your real lot size, and then you'll ride it up. Okay, you ride it up. Now, for me, at this point, I'm only looking to get 10 pips. I'm only looking to get 10 pips, right? So let's say I get 10 cents. I get in initially at 10 cents. It plays around, it plays around, it plays around, it plays around, plays around. Then finally it comes back. It crosses back over my entry point. Now I'm blue. I'm in the positive, right? I'm in the positive. And then I come out and market execute. Let's say I'm going to market execute at a standard, okay? $10, right? Now I'm going to do $10, and I'm only going to go 10 pips. So where would 10 pips be, right? So here's my little measuring tool. So let's say somewhere up here, right, that I got in, right? And I want to go up. What's wrong with this thing? Hold on. Okay. And I want to go up. I don't want this thing. Let me do this. Hold on. There we go. I want to go up, let's say 10 pips, right? So if I'm going to go up 10 pips, I want to do, let's see, what's this at? 31, 19. So 29 is really where I need to be at, right? Somewhere right there. Guys, look, I'm only looking to go that distance. That's 10 pips. But if I put $10 on that, that's $100 I would have just made. $10 times 10 pips is $100. Do you guys understand that? Like, do you, okay, just anyway. Now let's just say that the market kept going. Okay, let's say it kept going. So you got your 10 pips and you've secured your $100. But it keeps going, it keeps going, it keeps going, it keeps going, and boom, let's just say it gets up there. Now you're at the first take profit roughly, and that's 69 pips. That's 69 pips. But when you got to 10 pips, what you did was you actually put in your stop loss, right? You moved your stop loss up so that, what was I saying we were at? We were at 19, so 29 somewhere roughly, okay? So let's say right there. So you went from this black line, right? You went from this black line right here to that red line that was 10 pips. Okay, that was 10 pips. And then you got $100 potentially out of that, right? Right? So 19 to 29, yep. So you got 10 pips out of that. So you put your stop loss there, which means that now if the market turns around and comes backward, you don't lose your $100. It kicked you out the trade. But if you stay in the trade, move your stop loss up and it goes up, and now you hit the take profit one, now that's 69 pips times $10. Now, 69 pips times $10 is $690. Now, I don't know about y'all, but this would be in a few hours, roughly, right? A few hours. And unless you're making $700 a day at your job, if this took you 7 hours to get that, you should be okay with that because you're not doing anything, right? You just put your money, you're not going to lose nothing because you already secured your 100. And so everything above your 100 now is profit. So that's a potential $700 in this particular example. All right. Why? Because you know when to get into the trade, and you know that you should get in at the green line with 10 cents. Don't get in right there with your $10. Because if you get in right there at your $10, while it's moving around, if it's moving around and now it goes down 10 pips, now you're red $100. That doesn't make any sense. Just get in at 10 cents to just secure your position. And then what you do is you just let it do whatever it's going to do. Now, when your trade turns from red because it's negative and it goes into the blue and it starts to really move, you plop a standard in, or you plop whatever lot size that you need to do for proper risk management on the size of your account. You pop that $1 trade in, or you pop that $5 trade in, or you pop that 40 cents trade in. You do it at this point. Now you're only going to go 10 pips. Boom. Now you've got your 10 pips. You secure the bag by putting your stop loss at your 10 pips as it moves up. And then if you see that you still got room to take profit one, then don't be greedy. Put your stop loss here and then go ride it up to take profit one. Boom. Get out the trade, $700. You guys understand that? If you don't understand the money language that I'm talking, either you really need to check your pulse or something, because I haven't seen any way that anybody can show me where you can make $700 in a couple hours legally, morally, and ethically. And guess what? Do it from your computer and not even have to worry about and do any physical manual labor. I don't see where people are doing that, okay, and multiplying their own money. So that's one example, okay? If that makes sense, guys, let me know. Okay, I'm gonna check the comments here. Morally and ethically, and guess what? Do it from your computer and not even have to worry about and do any physical manual.
JG at FaceTime audio.
Sorry guys, Josiah's calling me, hold on. Okay, hold on. Let me see if I can mute this. At least turn it down. Okay, so I'm gonna check the comments here.
JG at.
Hold on, Pumpkin. Hold on, let me tell Pumpkin I'll call you back. Okay, so everybody's saying it makes sense, it makes sense, it makes sense. Okay, good. All right, yes, all right. So let's do another one, okay? Let's do another one and we'll go from there. My Pumpkin's just calling me. He ready to come home, but he's not coming home today. Okay, so let's come over here.
JG at FaceTime audio.
So let's come over here and let's find another one, okay? We did one example, let's do another example. So we did the GBP NZD, right? What did we say about GBP CAD? What was going on with this one? Okay, we can do GBP CAD, that's fine, because it's moved further enough away. Okay, so step number one is we have to look for divergence, okay? Look for divergence. If it doesn't have divergence, in other words, there's no indication from the candles, from the price action and the RSI that one line is going up, the X to D, so the X to D line, right? X to D needs to be going one direction, and then our RSI line needs to be going a different direction. If those two lines are going the same direction, then we're not messing with it. Okay, just don't even mess with it. So here we go. We can see very clearly X to D is going up, right? So what do we want to do? We want to come down here to our RSI line, and we want to see where our X point is in the RSI, right? We can see it there. And we want to see where our X point or where our D point is in the RSI. Okay, see where our D point is in the RSI. All right, now X to D is going up. I'm going to come back over here. I'm going to get me a trend line, and I'm going to draw from where the RSI point is down to where the other RSI point is. And as you can see, this is divergent, right? X to D line is angling up, and the RSI line is angling down. That's an indication that the market is going to do a reversal, which means what? If you look at the candlesticks, you can see that the most recent swing was going up, right? And it consolidated a little bit here, right? And it kept going up. And what is the scanner telling us? The scanner is telling us that the market is getting ready to come up here and then go back down. Now, this one has already hit take profit one, which is a good example of what I'm trying to explain to you, right? You'll see what I'm saying because it's already happened. It's already taken place, all right? So it's a good back testing example. So we can see that we believe that it was going to go, the market was going to reverse. And look what it did. It did reverse, right? It hit the entry point almost exactly, and it came down and it crossed over our take profit one. So if you were in this trade, you actually hit your take profit one, right? Now this one also has two entry points. Now when you have two entry points on the scanner, You have to be very careful. You want to make sure that the D candle on all of these, you want to make sure the D candle closes first. Like you don't want to try this and the D candle is still moving up and down, up and down. You really want the D candle to close, and you really want to see what this next candle is going to do as well. Okay, you don't want to just get in and just try to willy-nilly. This is your money. This is your life. This is the skill that you're learning that literally can change your life forever, right? And so what I'm saying to you is to have some discipline about yourself such that you can get your bag and you can run, okay? Not almost have the bag, lose the bag, be crying, oh my God, Forex don't work. Okay, that's ridiculous. When you can just pay attention and follow the rules. This game is a game of rules, okay? It's not about emotions. It's not that they don't care about how you feel. It's rules, okay? And most times if you follow your rules, you'll win. If you violate your rules, which is what I've learned, I violate my rules, then I lose. I'm like, dang, I knew I should have did that. I knew I shouldn't have did that, but I was being greedy, right? Or I was being in a hurry. I was being anxious. So here's a good back test. So we've got divergence present, right? So what are we gonna do? We're gonna take our line. Now that this one is going up, we want our trend line to go up, right? So we're gonna get our trend line here and we're gonna start at this C point, right? We're gonna start at this C point, okay? And we're gonna basically start here and we're gonna go to the, hold on. We're gonna go, remember what I said? Goodness gracious, this thing. What we're gonna do is, remember I said, if you start out here, you want to go until it gets to going in your direction, right? It hits this red candle first, this one right here, right? We're going in this direction, up, up, up like this, right? Okay, so it's going in this direction, right? This is where we want it. So this is kind of the trajectory of what we're looking at here, okay? That's kind of the trajectory of what we're looking at. So what happens? What happens is that now you've got this line here. You got this line here. And sometimes, I mean, it depends. If it's not enough candles, you know, you can always come back some, right? You can always kind of come back and choose a different point, right? You can always come back, whoopsie, and choose a different point, right? But that's kind of far off. I mean, the only other option would be this, right? Which is not a bad option. Hold on. Sometimes you kind of have to play with this scanner. It does some weird things with your lines, but you can kind of test this, right? So here you could come here, you could do this. This is actually really good here, right? Because see, looking at that, I'm like, well, you don't really have enough candles to see the trend, right? But if you come back a little bit and then you start here and you start drawing your trend line up, what happens is then now our rule, it's adjusted a little bit, but it still holds true. Right? We took our trend and we kept going. Now, what does that mean? That means that now we're not going to get into this trade really, okay, until the line comes down and closes below the red line, okay, below the red line. Now, could you have gotten in up here at the second entry point? You could have done that, right? You could have done that. If you're a little bit more advanced, you might have noticed a couple of things, right? You might see like, okay, well, you know, it's hitting this point. It came up, it hit some resistance right here and it fell back down, right? It fell back down. But for the beginner, you're just kind of watching the scan, just kind of want to see how it works. You know, you want to wait until it closes below this line. Like I said, don't be greedy. Some of y'all are looking at this red candle, but wait a minute, I missed all of that. Yeah, you missed it because you're hindsight. You're looking after it already happened. It's always hindsight's always 20/20. But before this candle happened, you didn't know when you were in this candle and it was going up, this strong bullish candle, you didn't know whether this thing was going to keep plowing up or not and hit the stop loss. You didn't know. So you have to have rules in place. And so this thing could have also come down and it could have pulled all the way back up and hit the stop loss. It could have done that. So this is why you wait until the candle closes below the line. So this is like the greater trajectory. But if we stick with our original plan, which is to start with our C point, right? And do this, start with our C point and do this. This is even more accurate now. right? It's even more accurate because now you can see that it came down here, right? It went back up past the first entry, right? And then it came down and closed. It came down and closed. What would you do, right? Right here when it closed, I'm going to do my little green line again, right? You would have gotten in, hold on, my little green. You'd have gotten in when it closed. You would have gotten in right there. Now that's right above take profit 1. Right? But again, you don't know how far below take profit 1 is going to go at that point in time. You don't know, right? The point is you wait though. You wait until it closes below the line. That's the key. You want to know the secret to the perfect entry in the scanner? I'm telling you, wait till the candle closes below the trend line. This is when it broke structure because it could have came down here and it could have went back up. Do you see what I'm saying? It could have gone all the way back up and still hit the stop loss. You don't know. So just wait until it breaks structure. When it breaks the structure, you would have gotten in essentially here on this blue candle. And then what you would have done is you would have gotten in at what? 10 cents, 0.01. You don't get in on your real lot size. Why? Because it can reverse, it can play around, it can lollygag and dance and do all that type of stuff, and you're not sure. So you get in on the 10 cent. When you get on the 10 cent, and then you see it starts to go blue, boom, and it's blue, now you get your real lot size in there. Put your real lot size in there, okay? So you put your real lot size in there. Say you get around this point right here, right? This take profit 0.1, you get in right around there, okay? And you get in, and let me get our price tool. So let's say we get in right around here, right? And we're gonna go down. We're gonna go down. So 73.63 would be 10 pips, right? 632 roughly, right? Somewhere about right there. Whoops. This thing is putting all type of little things on here. Okay, so let's start this again. Hold on. Okay, so 734. And we're gonna do, Lord have mercy, scanner. Let's just start over. Okay, so we're gonna start here. Okay, let's move it over here out the way. We're gonna start here at 732, or really 728. Let's just say 728, and we're gonna go down to 728.628. Right? Oh goodness gracious, this thing don't want to do right, like for me at all. Okay, so 734 we got. Let's move this one. Goodness. I'm sorry, guys. This thing kind of acts up sometimes, okay? But you got to be patient with it. Okay, so we got in at, what's that? 732, roughly a 732, okay? So we want to come down to 632, right? That would be 10 pips. So that's 635. That's good enough. Okay. Now I want you to look at this for a second. So you would have got in at this blue candle. You would have let it start coming positive. You wouldn't have put in your real lot size until it got to this blue line, right? This blue take profit 1 line. And then you would have gone 10 pips. That's 9.9 pips, right? But let's just make sure okay, there we go. 10.4 pips, right? We got our 10 pips. So now we would have got out, or we would have did our stop loss, or we would have just, manually gotten out the trade. I'm going to show you right here and put a red line there, right? We would have gotten out the trade right there. Now look, we only went from the green line to the red line, right? And didn't it cross the red line? It did. In the same hour, in this one candle, it went down, it came down, but it pulled back up. Y'all see that? It pulled back up, but it came down here. We would have got our 10 pips, and then it did what? Pulled up. Now, this is why some people lose, because they don't understand that it's about getting snatching small pieces out of the market, right? Until you're more experienced. Really, a lot of even the experienced people just snatch small pieces out, and as their account gets bigger, they increase their lot size, okay? But you get in here, you only get in for your 10 pips. If you plop your real lot size in right there, let's just say it's a standard, which is $10 a pip, and then you go 10 pips, that's $100 an hour. How many of y'all making $100 an hour? Please tell me, how many of y'all making $100 an hour from drawing up some lines? Like, come on now. This ain't rocket science, right? Your mind tells you that it's hard, but it's because you don't know what to look for. But once you know what to look for, then suddenly it becomes easy, right? So all we're waiting to do is for the price to come down, close below the line. We get in at 10 cents. It does whatever it's going to do, play around. It starts to go blue, get positive. We plop in our real lot size. We go 10 pips, boom, we get out the trade. The trade goes backwards. It pulls up all the way up here. Then it's starting to come back down. But what happened? The market closed. The market closed and now it's up there. Now, if you had stayed in this trade and you were so busy trying to get the take profit too, this is why some people win on the same trade that other people lose on. Because I would get in, get my 10 pips, and I'm out the trade. You're so busy trying to get down here to the take profit too that it didn't make it down there. Then it pulled all the way up. You got in at the green line, but now you're negative, and then the market closed. So you close in a negative position. When I got out, I already got $100. I'm on to the next. I'm happy day, happy weekend. That's $100, you know, plus maybe whatever else you did that you just made for the weekend for some spending money, right? So that's that. All right, guys, you got it? Do you have it? Let me just see. Let me just see if that makes sense. Okay. Let me just see. Let me go through. Let me go through. All right. Everybody is saying that it's making good sense. This is good. That's right. 10 pips and dip, guys. Like, come on. Get good at getting 10 pips and being out the door. Stop worrying about trying to get 50 and 60 and 100 when you're just trying to build your account up. Get the 10 and keep adding to your balance. Get the 10, keep adding to your balance and grow your account. And grow your account so that you can then start putting larger lot sizes on your trades. You're going shorter pip distance, but you're getting larger values because you're now leveraging more dollars per pip, right? And then you're literally reducing your risk because you're entering the trade at 10 cents. You're not entering the trade at $10 or $1 or $2. You're entering the trade at the minimum possible price you could get in at, 10 cents. So even if it went all the way back up, let's just calculate. Even if you got in right here at the green line and it went all the way up to, let's say, Lord have mercy, this thing is messing with me again. Let's say it went all the way back up to your stop loss, right? It did that. That's 51 pips. So you lost a whole $5, a whole $5 versus if you were in at $2 or you got in at $1, $1 now back negative 51 pips is $51. And that doesn't make any sense. Why would you do that? Why not just get in at the 10 cents, let it move around, and even if it goes backwards, could you lose $5 and be okay? Yeah, and nobody gonna lose sleep over the $5, but $50? Yeah, you looking sideways. It's not Forex that causes that. It's you not knowing how to execute properly and learning some of the techniques on how to minimize your risk and having proper risk management, okay? So hope you guys are seeing this, okay? Ray says, hallelujah. Vincent says, yep, small victories. Dion says, indeed. Y'all got it? Y'all got it? It was for you, Dion, right? It's just for you. Okay, so Euro USD. Okay, let's do one more, and then I'm done. I think you guys will have it. And then I just want you to practice in your demo. Practice in your demo. Let's do one more. So let's come over here. Let's look at, come over here and let's go back to the hour chart. And we got Euro USD here. Okay, perfect. Let's see what Euro USD was looking like. Okay, so Euro USD has already hit take profit 1, right? Well, actually, it didn't. Well, yes, it did, because it kind of came down here, right? It came down, and then it went up, and then it came back down again, which means that you should have got your money way over here, okay? So let's just see if our rules hold true. This is a great back testing exercise because you can see that if you had gotten in where I said get in and get your 10 pips and dip, you're good as gold. Do you understand? Okay, so let's do our rules. You gotta always do your rules. So we got X to D. X to D is going down in a line, right? All right, so now that means we need our RSI line to do what? Go up. All right, now I'm not gonna do it at the top because I can see that already, right? So that's our X line right there. All right, and then I'm gonna come over here and this is our D line right here. All right, so I can see that. All right, that's our X line and that's our D line. So now I'm gonna draw my trend line from this point up to this point. Perfect. So now we've got an X to D going down, and we got an RSI angle going up, which means they're opposite directions. We have divergence. We can proceed. Okay. So now that we've done that, I'm going to simply come up here, get my trend line. I'm going to start at my C point. And remember what I said, right? We're going to come down. And remember, all of this, hold on, let me get this out the way. All of this wasn't here, right? This D point was here. But these this red, this red, this red, this blue, this red, this blue, this blue, this red, these things were not here when the scanner first kicked out the trade. Okay, you can't let what you see now get in the way of what you couldn't see before. We're back testing to prove our theory, is what we're testing our theory, right? So the D was probably here, and then the harmonic scanner kicked out Euro USD and said, hey, this is a potential reversal pattern, and you might want to get in, right? Something like that. So the market was going down, right? And you can see the scanner says, hey, here's entry point 1. It could potentially be entry point 2, but we expect it to go up. See, so market is going down, 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 down. It's going to get to a point. Harmonic scanner says reversal, reversal, alert, alert. We're getting ready to go up, and you want to catch the movement going up. So you draw your line, right? And at the time of the scanner, at the time of the, we only had these candles right here. Right? We only had, so when I'm saying these candles right here, I'm really talking about this red, we only had this one right here, these, and this, right? So this was the highest point, right? We started at the C, and remember what I said. We start up here and we come down, and the first one that we hit, which is essentially this red candle here, that's where we're gonna draw. So as long as we have 2 points, this is point 1 and this is point 2. So 1, 2, go straight through. That's the theory on drawing a trend line. 1, 2, go straight through. All right. So we've done that. So what does our rule tell us? Our rule tells us that we don't get in the trade until the candle closes above the trend line. Why? Because that is our structure. It broke structure. Okay. Now you can see there's different points. I just pretend that this wasn't even here. We can see these different points. Now, I also want you to understand something. This D candle, you don't ever start this analysis until after this candle at the D point closes. Well, what happened in this particular instance? The D point, the candle associated with the D point is the candle that closed and is the candle that already hit the take profit too, right? It already hit the take profit too. So if we don't get in and we don't analyze until after the D candle closes, then this trade would not have been a trade we would have gotten into anyway. Why? Because we wouldn't even be looking at divergence, and we wouldn't even be looking at this stuff until this D candle closes. And the D candle closed already above take profit too. It already did that, right? It already did that. And so then what did it do? It turned around, it came back down, it had this huge, huge, huge bearish candle. This was a bullish engulfing candle as it was, right? So some of my more advanced traders would have seen this candle forming, and it would have basically cast a shadow over this candle, and this candle. They might have said, oh shoot, I'm getting in, right? And they would have went 10 pips. And they would have gotten 10 pips out of this, and they would have gotten out, and they'd be done. But no, the inexperienced trader sees this big candle. They get in. They don't know they should only be going a short distance. They get in. They're blue. They're blue. They're blue. Oh, they're red. They're red. They're red. Hit the stop loss. Oh my God, trading don't work for me. Right? It's strategy. It's strategy. So technically, using this strategy for the scanner, I wouldn't have been in Euro USD, right? Because I have to wait for this D candle to close. And if the D candle closes and it's already above my TP1 and TP2, okay, well, I'm done on that for now. Okay, I'm done for that on that. I'm done for that right now. Okay. So let's see. I hope you guys get that point. All right. So let's see. always using the one. No, Dion, you can use you can use the 15-minute chart. You can use the 1 hour, 4-hour chart. You can use whatever. I don't personally recommend people use the daily chart, because are you trying to wait a day to get your money? I mean, it takes a whole day for a candle on the daily chart to form. Like, nobody's trying to wait a whole day, right? But you can do 15 minutes. 15 minutes is good. You do let's do we all want to do a 15-minute. We'll do a 15-minute one, and then we'll be done. Okay. And also only utilizing the scanner at the top of the hour. It's not so much about what is the top of the hour or not the top of the hour. All you're looking for is when the D candle closes, and that's gonna be at the top of the hour, right? But it doesn't mean that that's time to get in. It just means that that will be a great time to start your analysis, right? And it doesn't matter what time. It matters that the candle closes, but in this case, it closes above. If we're looking at a reversal where we're looking for a downtrend, a bearish movement, then we want the candle to close below. That's it. So don't get caught up into the top of the hour, bottom of the hour. That don't matter. Don't confuse yourself. Just focus on what I said. Just look at the candles. Don't worry about what time it is. Look at the candles and follow this strategy. If the D candle has closed, then you come and you look at your divergence. If there's no divergence, it don't matter. If it is divergence, you proceed to draw your trend line. When you draw your trend line, then you're only waiting until the next candle or whatever candle closes above or below the trend, such that it breaks the structure of the trend. That's it. If it doesn't break the structure of the trend, then you don't get in. Okay. If it does break the structure of the trend, then you do get in. You do get in at the 10 cent, and you wait till you get in profit, and then you plop your real lot size in there. You go 10 pips, and you get the heck up out of Dodge. That's what you do. Okay. You're going to run in to the bank. You're going to snatch the money bag, and you're going to run right back out the bank. Stop lingering around in the bank, talking to the teller. Oh, hey, how y'all doing today? Getting your little candy off the counter, eating your little suckers, sitting down, can you talk to a financial advisor? You're doing too much. Get in, get the bag, and run. That's what you're doing. Get your 10 pips and get out. I don't care if it's the top of the hour, the middle of the hour, bottom of the hour. Who cares? Just get in, follow the strategy, and get the 10 pips. Okay, so Dion, I hope you got my point. Okay, good. Want to make sure we crystal. All right, so I'll do one more real fast. We'll do a 15-minute chart. All right, so here we go, 15-minute chart, USD JPY. All right, let's see what UJ was looking like before the market closed up. All right, here we go. This is another back test, right? Why? Because, well, this D candle, well, yeah, because it already hit take profit 1, and it already hit take profit 2 after this D candle closed. Y'all see that? This D candle closed up here, and then, but it closed below the entry points and stuff, right? And then it really came down and hit take profit 3, right? And then it kind of bounced around and did some craziness. Now, let's just remember though, let's do our analysis, right? What does our analysis say? Okay, well, let's start over. All right, let's get our vertical line. Where is the X point? The X point on the RSI is right there. And then where is the D point on the RSI? It's right there. And now what we're going to do is we're going to get our trend line, and we're going to draw from right here on the line to, oops, sorry, right there on the line. Goodness, there we go. To right there on the line. Okay, now what's happening? X to D is going down, and what's happening here? The X to D is going up. Okay, so we're looking like we're gonna have a nice pattern reversal, right? So great. So we come here, our D candle closes here, right? Our D candle closes. Now, as you can see, this looks a little bit odd, right? This looks a little bit odd. So, you know, this one, in drawing your trend line, the C to the D, it's really tough to see because all the candles are below anyway, right? All the candles are below. And so what happens is that it's saying that if price gets up here, then we're going to come down, right? Then we're going to come down. But it never really got up there. It hit these points, but it never really got up to the point that we needed to get it into yet. Right? So if we were going to do, you know, the C point up, right? This is kind of a weird one. If we were going to do the C point, this candle right here, we're going to do the C. We don't really have any candles right here to do anything with, right? The candles are all underneath, It never got up there. It never really did anything, right? So, okay, what else could we do? We could come and we could look left, right? And we could say, okay, really, what is the trend doing, right? I mean, and really the trend is going down already, right? I mean, you guys can see that, right? I mean, if not, then I can draw it out for you. It's not a big deal, but you know, we can start here, right? Oops, hold on. We can start here. This thing does not want to cooperate with me today. There we go. All right, so we could, you know, we could do something like this, right? You see it started up here. I mean, it started up there, but it doesn't matter where you started. The trend is the trend. The point is you're trying to see that it's a downtrend, right? So, right, you could do something like this, essentially, right? 1, 2, go straight through, okay? So this is a downtrend, right? And we're saying that this is supposed to be a downtrend. Well, it's already a downtrend, right? And that's what we're saying. Like it didn't even break anything yet, right? I mean, all the candles stayed underneath. All the candles stayed underneath. All the candles stayed underneath, right? So in this particular case, there's no trade to have. Not based on the strategy. There's no trade. Like, don't force something that doesn't exist. Okay? There's nothing that it doesn't exist. So don't worry about it. Just move on. Next one, right? Let's see. We did the GBP CAD already. CAD JPY. Let's see how CAD JPY look. This is the last one, I promise. CAD JPY. Okay, so this one is saying, okay, it's still hanging out down here, it's still doing some stuff, right? Okay, so fine. Last one, I promise y'all, and then that's it. But hopefully you'll get the point of just the exercise of doing what I'm saying do. If you do that, you're gonna be okay, right, with the scanner, and it's real easy to do it. So X to D is going down, right? Has our D candle closed? Yes, this is our D candle. The D candle has closed, all right? So I'm gonna come down here. I'm going to do my X line. My X line on my RSI is right there. And I'm gonna do my D line on my RSI. It's right there. All right, now I'm gonna come over here, get my trend line. I'm gonna draw from this point. Lord, help me. Okay, I'm gonna go from this point to this point. Okay, so X to D is going down, and what? X to D is going up. Okay, great. Wonderful. So we said, okay, we have the potential for divergence. Okay, now remember, all of this hadn't happened yet. You don't even see all of that yet. You don't even see all of that yet, right? So what we're gonna do is we're gonna draw our trend line. So we're gonna start at our C point, all right? And what we're gonna do? We're gonna try to do something like this, right? Now remember, oops. We're gonna do something like this. Here's our C point, right? And we're coming straight through like this, right? So we hit this blue candle, we hit that red candle, we hit this blue candle, right? 1, 2, go straight through, okay? So look what happened. We're looking for the candle to actually close above the line, right? And our D candle is right here. So let me put a little line right here so you guys can keep an eye on it, right? Here's our D candle. So starting at this point, we're saying we're looking to go up in this trade, right? We're looking to go up in this trade. We're looking to buy, right? Why? Because the entry is down here and we're going up. We're looking to buy, all right? So the buy opportunity in our example, the way that we're gonna do this does not present itself until what? Until the actual market structure is broken, right? So if C to D, this is going down, 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 then we need the trend to start going up. It needs to be above the candles, after the D, not before the D. Don't worry about what's happening before the D, because the D is our indication candle, right? Okay, so after this, we do not get in this trade until price comes above this line. Now, what's cool is that the entry point, it says that it's here, but it also has a second entry point, doesn't it? And it says right here, right here is really where this second, the entry point and our trend line cross over. So this second entry point is going to be probably more of the indication. So if anything, you would have to wait in this trade. So this might be a good one to watch when the market opens, right? When the market opens on Sunday night, it's CAD JPY. And what are you looking for? You're looking for the candles to move, and what? Close above our red line. And when it closes above our red line, what we're going to do, we're going to get in at 10 cents. We're going to let it come down, go around, spin around, do circles and flips. And then once it starts going in profit, we're going to, boom, put our real lot size on it. And we're going to go 10 pips. We're going to get our 10 pips and we're going to get out of Dodge. I don't care if this thing goes all the way up. I don't care if it could come up to take profit one and turn around and come back down on your behind. Get your 10 pips and get on up at the bank. Okay, that's how it works. So perfect entry on Harmonic Scanner. First, step one, wait on the D candle to close. Okay, step two, identify what direction X to D is going in. All right, down or up. Step three, find your X to D points down here in your RSI. Step four, draw your line with your trend line from point X to point D inside the RSI, and you want to see if this line is going the opposite direction of that line. If both of those lines are going opposite directions, then you have divergence present. Divergence means that you have a higher probability of a reversal taking place, which is what we want, a reversal, because the scanner picks up reversals. That's what we're looking for. If it doesn't have divergence, then ideally we don't want to worry about it. Just move on. There's tons and tons of trades out there, $5.3 trillion a day worth of trades. Don't get caught on the one trade that you're going to try to force it. Okay, you're going to try to force it. You're going to try to make it give you what you want. No, the market is no respecter of person. All right, so divergence, great. Then you're going to come, you're going to draw your trend line, right? If it's already in a downtrend, which you can see, it's already in a downtrend. Oops. You can already see it's already in a downtrend, right? Then what we're looking for it to do is to reverse, okay? And we don't get in until we have indication of that reversal, which is that structure is broken. This downtrend has a trend line, and until the price comes up above that line and closes, we do not have any proof that this is potentially getting ready to go up or not. We don't have anything. Doing what it's doing down here, we don't know. It could continue. It can come up here and come back down, and come up here and come back down. But so we're going to wait until it closes above our trend line. We're going to get in. When we get in market execution, we're going to get in at 10 cents. When we get in at 10 cents, the reason so that we can minimize our risk in case the trade goes backwards. If we get in at 10 cents right here, let's say at 52, right? 52, 84.523, and it goes all the way down. 523, 323, right? Let's just say 32, right? Just for the sake of it. So it'll go from 52 to 32. 52, 53 minus 33, right? 532 to 332. 53 minus 33 is 20 pips. If it comes all the way down here to 20 pips and you're at 10 cents, you lost all of $2. $2, and you should be okay with that, okay? If it then hits your stop loss, and it hits the stop loss, get out, okay? But if it gets to $2 and then it doesn't hit the stop loss and it turns around and comes back up, and now you're positive again. When you're positive, boom, you get in, you hit your real lot size, you go your 10 pips, and you get on about your merry way. All right, guys? That is how that works. Oh, Ray says we're up to $9 trillion a day, is it? Really? $9 trillion a day? Let's see. We'll see. Volume of the Forex market. Here we go. Let's see. Forex market size. When was this? When was this? When was this? When was this? We don't see a date of this actual thing here. It's the biggest, most popular. Okay. Ray, you got to send me something on that because that's a lot. 9 trillion a day. Send me some info on that, brother. How much is traded in Forex per day? Let's see. That's 2016. That ain't gonna work. That ain't gonna work. That ain't gonna work. How much trading capital to Forex? That's 2014. Yeah, send me something, Ray. Let me see. Forex trading volume per day. Here, that's what this is, 2018. Let's try this February. What's this saying in there? London. Dun, 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 dun. $2 trillion. However, farther. Okay, I don't see. Okay, send me some stuff. Send me some stuff, Ray, on that. In the meantime, guys, you have the point, right? You have the exercise. You know what to do. You know how to find your entry points. Follow the rules. Enter a 10 cent. Then pop your right lot size on once the price goes blue. Get 10 pips. Get out. Go live your life. Go find another trade. Go share it with somebody else how they can do this. How about that? All right. So with that being said, guys, I'm out of here. I hope that helped you. And that's it. So that should answer the questions about why Harmonic Scanner is bae and finding your perfect entry. Share this video, guys. Let people know how this works. And they need to get with us in iMarkets Live and get plugged into this Harmonic Scanner. This is going to help you make money. I just showed you how to do it. Like, I don't know why you don't know how to do it if I just showed you how to do it. You can do this. And we're looking forward to helping you win and be successful here. And I'll see you guys in another video. Bye.